Okay, we'll start with the revision related to exemptions under GST. So kindly look into page number 38 of your That's It book. So in these exemptions under GST, we have got lot of exemptions, and the first section 11. So the section reference for exemptions is section 11 of CGST Act and section 6 of IGST Act, and it says that power to grant exemption is given to the government on the recommendations of the council. So from time to time they will be coming out with the various notifications exempting various services and goods, but what we have is only exemption with respect to services, and the notification that we need to remember is notification 12 of 2017 related to exemptions, that is section 11. So whenever you are writing an exam, so you need to give the reference section 11 read with notification 12 of 2017. Then we have a latest amendment section 11A as well as section 6A of IGST Act, which says that government on the recommendations of the council and may not recover GST because a particular tax has not been levied or short levied as a past general practice. Because of the past general practice, there has not been any levy of GST or there has been short levy of GST. Now in that case, the government has power to waive off if there is any rate that has been given also, but this is based on general practice, and only when the people are making a protest against it that this will happen. Then next we have first one, agriculture related services. In this, the first point you need to remember is any service in relation to agriculture or agricultural produce is exempted, and agriculture refers to cultivation of plants and rearing of all life forms of animals except horses. For what purpose? For food, fiber, fuel, raw material, or any other natural, like any other similar products. And agricultural produce means what? The primary produce out of agriculture on which no processing is done or some processing as is usually done by a cultivator, which does not alter its essential characteristics but makes it marketable for primary market. So any service in relation to agriculture or agricultural produce is exempted. And paddy is an agricultural produce, but rice is not an agricultural produce, because paddy to rice is not usually done by the cultivator, and due to that reason it is not an agricultural produce. Even though rice is not an agricultural produce, but loading, unloading, packing, storage or warehousing of rice is exempted. What about packing, storage and warehousing of other agricultural produce, which is already covered under the first point. So warehousing of fruits, vegetables and other agricultural produce is covered under point number 1 above, that is service in relation to agriculture or agricultural produce. So in this service in relation to agriculture or agricultural produce, we have farmer education and training, seed testing, soil testing, and even it includes waxing, pruning and packing of the vegetables. Everything will come into this. Then third, artificial insemination of livestock, so except horses is exempted. Then service by way of storage or warehousing of minor forest produce and cereals and pulses. So basically cereals and pulses, not everything is agricultural produce. Minor forest produce is also not agricultural produce, but its storage is exempted. If it is agricultural produce, anyhow it is covered under the first point. So these are the 5 exemptions that we have with respect to agriculture related services. Then second area, insurance services. In insurance service also we have few exemptions. So first point, service of life insurance business under NPS trust, National Pension System Trust, they will be receiving monthly contribution which will be exempted. Then group insurance fund, of which group insurance? Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. These 5 group insurance funds are only exempted. Then there is an insurance company which is providing general insurance services. That general insurance service is under government notified schemes. Basically government notified schemes will be targeted to agriculture and farmers, below poverty line, women, and even Nirmaya health insurance is also exempted. Then next we have an insurance company which is providing life insurance services. That life insurance services will be provided under government notified schemes. So government notified schemes, here scheme ends with the word Yojana, and even micro life insurance also exempted, but for micro life insurance the maximum sum assured is 2 lakhs, not the minimum sum assured, the maximum sum assured is 2 lakhs. Then insurance services provided to government is also exempted, which means government is receiving the insurance services. There is an insurance company, either general insurance or life insurance service provided to government, the premium received will be exempted. Then reinsurance of any exempted insurance is also exempted. If there is an insurance company which is providing the insurance service to government, that insurance is exempted. Now that insurance company takes reinsurance from another insurance company, that reinsurance premium is also exempted. Then services provided by business facilitator or business correspondent to insurance company in rural area, like how banking, even for insurance also business facilitator or correspondent earning commission from rural area branch is exempted. And with respect to this point number F, reinsurance includes retrocession also. So which means when the reinsurance is exempted, even the further reinsurance of that reinsurance include retrocession, that is a reinsurer further transferring risk to another insurer, therefore reinsurance is exempted. If reinsurance is exempted, retrocession is also exempted. Then next one, we have banking and other financial services. In this, the first point, transaction in money. Transaction in money may be for a separate consideration or without separate consideration. If transaction in money is without consideration, it is neither goods nor services. If the transaction in money is for a separate consideration, we need to check whether the consideration is interest or discount. If the consideration is interest or discount, it is exempted. If it is any other consideration including interest involved on credit cards, it will be taxable, and wherever it is taxable, it will come under FCM. Then services provided by a banking company to basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana, any service to basic savings account holders under this scheme. Third point, foreign exchange transaction that takes place between banks, between forex dealers, between banks and forex dealers is exempted, but between bank or forex dealer and the customer, then only it will be taxable. And next, number 4, services by an acquiring bank. Acquiring bank means a bank which do the settlement. So in that case, for card transactions, if the processing fees is charged, that processing fees will be exempted, provided the transaction amount, that is a card settlement amount, does not exceed 2000 rupees per transaction. So if the transaction is up to 2000 rupees in a single transaction, GST on processing charges for a card transaction up to 2000 is exempted. Then there is a multi-service SEZ. Multi-service SEZ, there is an intermediary who is providing services to customers outside India in relation to currencies in other than Indian rupees, that is foreign exchange. So that multi-service SEZ, the intermediary will be exempted, and it will not become export of services. Why it will not become export of services? Because as per section 13 of IGST Act, for intermediary services, location of supplier will be taken as the place of supply due to that reason. Then next, health services. And in addition to that, we need to know business facilitator, business correspondent, which is there in RCM. Business facilitator or business correspondent earning commission from rural area is exempted. So even business facilitator, agent of business facilitator, business correspondent, agent of business correspondent, that is business facilitator or agent of business facilitator, then business correspondent or agent of business correspondent, earning commission from rural area, is exempted. So but this is connected to RCM, so it is covered under the list of services under RCM, but this is also an exemption point which you need to keep in mind. Next, we have health services. In case of healthcare services provided by a clinical establishment, authorized medical practitioner or paramedics is exempted. It includes ambulance service also. Even healthcare service in relation to animals or birds is also exempted. But when it comes to healthcare services to human beings, room charges, we have a restriction. Room charges, if it does not exceed 5000 rupees per day, then it is exempted. If the room charges exceeds 5000 rupees per day, entirely taxable, but this is not applicable in case of ICU charges. Any ICU charges, whatever may be the room charges, it will be fully exempted. Then we need to understand what is the meaning of healthcare services. Healthcare means what? Healthcare means pre-treatment. Pre-treatment refers to before treatment, diagnosing the patient, treatment, and post-treatment. Post-treatment means keeping the patient in observation. So pre-treatment diagnosis, treatment or post-treatment for what? For any disease, illness, injury, pregnancy in any recognized system of medicine, including transportation of the patient. Transportation of deceased is not a supply, but transportation of patient is exempted. And transportation of patient may be part of healthcare services. If it is part of healthcare service, it is already covered. Even if it is not part of healthcare service, also it is exempted. So part of healthcare or not part of healthcare, but does not include cosmetic surgery, plastic surgery and hair transplantation. But these three will come under healthcare service if it is carried out to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma. Then next we need to understand healthcare services by a clinical establishment. What is a clinical establishment? Any place where the healthcare service is provided is known as clinical establishment. That can be super specialty hospital, multi specialty hospital, or it can be clinic, any place. And then authorized medical practitioner. Authorized medical practitioner means any person with minimum MBBS degree and registered with the Indian Medical Council. Then paramedics. Paramedics means so those who assist the doctors like nurse, lab technician, physiotherapist, etc. Then renting of rooms to inpatient in a hospital and food supply to inpatient is part of healthcare service and it is exempted. But renting of rooms to inpatients is exempted provided the value does not exceed 5,000 rupees per day. So don't generalize this statement. So they have given a circular that renting of room to the inpatient is exempted. That does not mean fully it is exempted. It is subject to the restriction of that 5,000 rupees. Whereas food supply to inpatients, there is no restriction. Food supply to inpatients is always exempted. Who are inpatients? Those who are admitted in the hospital is known as inpatient. And then service provided by consulting doctors to hospitals is also exempted. Some doctors will be associated with the hospitals and not as employees, as consulting doctors. The hospital receiving money from patient is also exempted. Patient giving money to the doctor is also exempted. Then services provided by ERT or IVF. So infertility treatments. To treat the infertility is covered under healthcare service and it is exempted. Even we have an exemption for rehab services. So rehabilitation professional, where they should be working. If they are working in education institutions or medical establishments, it is exempted. But if they are working in the rehab centers, that rehab center should be by a trust or by government. Then only it is exempted, otherwise it will be taxable. That is, services provided by rehab professionals in private rehabilitation center will be taxable. Then next we have fifth one, entry tickets. There are few entry tickets which are exempted irrespective of the ticket price. What is that? Three things related to animals, that is tiger reserve, zoo, wildlife sanctuary. It is always exempted. Then three places, that is museum, national park and entry to protected monuments. These are exempted irrespective of the ticket price. But there are 9 entry tickets which are exempted if the ticket price does not exceed 500 rupees per person. So in that 4 performance related. So that is theatrical performance, musical performance, and then concert, and then we have dance function, dance performance, dance, theatrical performance, concert and musical performance. These 4 performance based. Then 4 events. What are those events? Circus, award function, then pageant and sporting event. 4 events. And finally 1 place, that is planetarium. These are the 9 entry tickets which are exempted if the ticket price does not exceed 500 per person. If the ticket price exceeds 500 per person, entirely it will be taxable. So all the monetary limits, if it crosses the monetary limit, entirely it will be taxable except in case of incubator services. Incubator services will be exempted up to 50 lakhs. If it crosses 50 lakhs, the excess is only taxable. Then pension services. So contribution to Atal Pension Yojana or any state government owned pension fund will be exempted. Only these 2 pension schemes are exempted. Then services by specified organizations. Employee State Insurance Corporation, Employee Provident Fund Organization, National Center for Cold Chain Development and Foreign Diplomatic Mission located in India and Coal Mine Provident Fund Organization. These are the specified organizations and if they collect any amount that will be exempted. Here Foreign Diplomatic Mission in India, example, UN or international agencies or embassy or consulate located in India will be the Foreign Diplomatic Mission in India and their outward supply is exempted. Then next we have charitable and religious services. In that, any charitable institution or charitable trust which is registered under 12A or 12AB of the Income Tax Act, if they are providing specified charitable activities, then it is exempted. What are those specified charitable activities? Number 1, so that is public health. Number 2, advancement of religion, spirituality, yoga. Number 3, educational programs. To whom? To orphans, physically, mentally traumatized persons, prisoners or persons over 65 years residing in rural area. Then number 4, environmental preservation. Then next 2, there is a old age home. That old age home is run by central government or state government or a trust. And if they are collecting for every person not more than 25,000 rupees per month, then it will be exempted. The 25,000 rupees is the gross amount that includes lodging, boarding, etc. And here who is considered as an old person aged 60 years or more. Then services by way of conduct of religious ceremony. So there is a purohit or a priest or a father who conducts the religious ceremonies. Whatever money that they are earning will be exempted. Services by specified organization for religious pilgrimages only to Kailash Manasarovar Hajj, Kailash Manasarovar Yatra, Hajj Yatra. These two are only religious pilgrimage. For that, if there is any specified organization working, then the money earned by them is exempted. Then incubator and incubator services. Incubator services will be exempted up to 50 lakhs in a financial year, and if it crosses 50 lakhs, the excess is only taxable. And two conditions. Condition number 1, 3 years not elapsed from the date of signing the agreement, and previous year also the gross receipt should not exceed 50 lakhs. But services provided by incubator will always be exempted. Whatever may be the amount, provided that incubator is approved by the government for availing the exemption. That means they should be approved incubator, then only it is exempted. If they are non-approved incubator, then it will be taxable. But incubator service is exempt up to 50 lakhs. For example, first year 60 lakhs. By default, first year exemption will be available because previous year it is 0 and taxable value will be only 10 lakhs. Whereas second year 40 and previous year it exceeds 50. So second year you will not get exemption, entirely 40 will be taxable. Whereas third year 70 lakhs and second year it does not exceed 50 lakhs. So therefore third year they will get the exemption, so 20 lakhs, and thereafter there is no exemption after 3 years. Then next, education services. First point, any service provided by an educational institution to its students, faculty and staff is exempted. So what is the meaning of educational institution? Category 1, up to 12th standard or equivalent. Category 2, education for obtaining a qualification recognized by law. Category 3, approved occasional education. These are the three. And here approved occasional education means any educational institution which is providing ITI, Industrial Training Institute or Industrial Training Center, affiliated with NCVT or SCVT. So approved occasional education means ITI, Industrial Training Institute or Industrial Training Center, affiliated to whom? Affiliated to National Council for Vocational Training or State Council for Vocational Training. And modular employable skill course, that is also coming under approved occasional education. Modular employable skill course. Modular employable skill course is also approved occasional education. Then we need to understand any service provided by education institution to its students, faculty and staff is exempted. That service includes even entrance fee or fee charged for issuing eligibility certificate or fee issued for migration certificate to the ex-students. So to the prospective students, whatever services they provide, and for the ex-students by giving transfer certificate or migration certificate, that is also covered under the exemption. That is a circular. Then second point, services provided to an education institution. First one is by an education institution. This is to an education institution. Remember 3 activities, that is transportation, security and housekeeping within the premises, and catering. Only to category 1 education institution is exempted. Whereas in case of conduct of examination or admission to the institution, all 3 categories it is exempted. Supply of online educational journals and periodicals, only for category 2 institution it will be exempted. But the security and housekeeping service should be within the premises. Then next, suppose if there is a Anganwadi school, that Anganwadi school is receiving the catering service. So catering service provided to Anganwadi school will be exempted because Anganwadi school will come under category 1 education institution up to 12th standard. Preschool will come under category 1 education institution. So therefore catering service provided to Anganwadi school is exempted. Whether the fund is given either from the corporate donations or government or any person, that is irrelevant. Exemption is provided to service provided to an education institution including Anganwadi, which provide preschool education by way of serving food, including midday meal scheme under any midday meal scheme sponsored by government, irrespective of the funding of such supplies from government grants or corporate donations. Then third point, there is IIM, Indian Institute of Management. These IIMs are offering any courses up to 1 year, then it will be taxable, where they will be giving participation certificate. Suppose if it is beyond 1 year, then it will be exempted, where they will be offering either diploma or degree. Then number 4, services provided by an educational institution by way of conducting entrance examination is exempted. So but it should be by an educational institution and they are not students, even then if it is an entrance exam fee, it is completely exempted. Here there are some bodies, National Board of Examination or Central Testing Agency, which objective is only to conduct the entrance examination and give the score. Based on that they will get the admission. So if they are collecting entrance exam fees, that is also exempted because they are also treated on par with education institution for the limited purpose of conducting the entrance examination. Then next, Number 5, amount paid to training providers under DDUGKY scheme. So people will go to rural area and they will be providing the training to the unemployed youth over there, and they will receive some money from Government of India, that will be exempted. Then any service provided by, say this, National Skill Development Corporation, and this National Skill Development Corporation, so whatever course, that should be notified by National Council for Vocational Education and Training, NCVET, and below this there will be 3 bodies. Who are they? Awarding body, assessment agency, or training body. Awarding body will just give the certificate, whereas assessment agency will conduct the test, whereas training body will provide the coaching. So these 3 people are only notified now for the purpose of conducting any skill course under National Skill Development Corporation, and if they provide service in relation to any scheme implemented by NSDC, vocational skill development course under National Skill Certification, or any national skill qualification approved by NCVET, so that will be exempted. So first we need to understand, below this National Skill Development Corporation, we have 3 people: awarding body, assessment agency, training body, and they will be offering the courses. What courses? Any scheme implemented by NSDC, or any vocational skill course under National Skill Certification, or any national skill qualification approved by NCVET. So then the money received by them will be exempted. This is the latest amendment. Then services by assessment bodies under skill development initiative. Under skill development initiative, they will be providing the assessment related to like evaluating the curriculum and suggesting the changes any. So these assessment bodies, basically people from the industry, they will be receiving some money from Government of India, that will be exempted. That is skill development initiative. Then affiliation services. Affiliation services, but importantly provided by central government or state education board to a school established, owned or controlled by central government, state government, local authority, government authority or government entity, then only it will be coming under the exemption. What if the government, that is a central education board or state education board, is giving affiliation to a private college or a private school, etc., that will be taxable. That affiliation fees will be taxable only to government, central government, state government, local authority, government entity. If they own anything and for them if they are providing, then only it will be exempted. That affiliation service is exempted. It may be central education board or a state education board. Then some key points in this regard: fee collected by ICR, ICMI is exempted as their education institution. However, fees collected by the coaching centers or individual faculties is not covered under exempted, because ICI and ICMI are education institutions, category 2 education institutions, so they are providing qualification recognized by law. Then up to 12th standard, it can be any board, so it can be CBSE, state board, matriculation, ICSE, etc. Private tuitions or home tuitions will be taxable. Approved vocational education means a course run by ITA or ITC affiliated to NCVT, or modular employable skill course, that already we discussed. Then next, then we have services provided by government. So this is with respect to education services we completed. Services provided by government. Services provided by government, we are referring to central government, state government or local authority. And here there are 2 activities of government which is not a supply: panchayat or municipality functions under constitution, then liquor license. This is excluded from supply. All other activities of government, whether it is goods or service, it is covered under supply. In that we have Department of Post. Department of Post, only 3 activities are exempted, that is inland letter, postcard or registered post or book post of envelopes less than 10 grams. Then Indian Railways. In case of Indian Railways, other than transportation, because for transportation we have separately other than transportation. So 3 activities, that is if they are providing services to individuals by way of selling platform tickets, then facility of clock rooms or waiting rooms or any battery operated cars, then service provided by one zone or division to another zone or division, services provided by Indian Railways to special purpose vehicles. So by way of maintenance of the infrastructure which is built by the special purpose vehicle, so during the concession period. So which means that, so there is a special purpose vehicle which will construct the lifts, escalators, etc. and all, and that constructed will be given on rent to the Indian Railways. So this is service provided by SPVs. Now what Indian Railways will do? So these premises or infrastructure like lifts, escalators will be maintained by Indian Railways. When they maintain this, they will be receiving some money from the SPVs because they need to maintain. Actually, this asset, this particular lift escalator is owned by SPVs, but SPVs will not do the maintenance of this. They will be giving it to the Indian Railways. So Indian Railways will do the maintenance of this. When they do maintenance of this, they will get some money from the SPVs. So that money received by Indian Railways will be exempted. We have a parallel exemption. Now SPVs collecting the rent from Indian Railways for giving this infrastructure, whether that is also exempted? Yes. So during the concession period, try to understand that there are two exemptions here. During the concession period, so there will be SPVs. What is this concession period? Means say for 5 years or 10 years. So yes, Indian Railways is not having money, so they will be authorizing SPVs to do the construction of certain infrastructure. So for example, lifts and escalators. So an SPV has constructed and permitting Indian Railways to use it, for which Indian Railways will pay some money. That will be exempted in the hands of SPVs. Now during this concession period, Indian Railways will do the maintenance. When they do the maintenance, SPVs have to, generally that asset is owned by SPV, means they need to do maintenance. But as Indian Railways is doing the maintenance of this asset, so they need to get some money from the SPVs, that is also exempted. Then usually one division or zone will be providing service to another division or zone, that is also now exempted. Previously it was not covered under the exemption. And next point, we have previously platform ticket, then buggy service, that is inside the railway station, transportation of old people or passengers, and then clock room charges, waiting room charges, whether it is taxable or not, there was a dispute and they were charging GST, but now they have brought it under the exemption. That is this latest amendment related to this. Next one, transportation of goods or passengers, we have separate chart for that. Then other services, any other services to business entities, so we have taxability and exemption, and other than business entity will be exempted. So which means, what are the services which are covered under the taxability? Department of Post, Indian Railways, transportation of goods or passengers, and services to business entities, and that services to business entities includes airport or port services, includes airport or port services. So that is also part and parcel, because airport or port will also be providing service to airlines. That is also part and parcel of this, that will be exempted. Apart from this, any other activity provided by government will be exempted. So what are covered under the taxability? Department of Post, Indian Railways, transportation of goods or passengers, services to business entities including airport or port services. All other activities of government is to individuals, that will be covered under the exemption, it will not be taxable. But again, here, what are the services to business entities which are covered under the exemption, etc., that is there in segment 3. So you can give the page number reference related to this. So we have list of services which are under RCM. There I have connected this. Refer to page number 26. Refer to page number 26. In this page number 26, you can see specific exemptions. So this is services provided by government to business entities. When we say services provided to government to business by government to business entities, we also refer to, like parliament or assembly or court or tribunal providing service to business entities, that is also covered under this RCM. Here we have some specific exemptions. First, RTI charges, Right to Information Act charges. Then interdepartmental service, one department to another department of central government, state government, but all these are services to business entities. Suppose if there is interdepartmental service between post, so post is providing services to any other department, that is not covered under the exemption. Actually these exemptions are covered under the last heading. What is that last heading? Department of Post, we have only 3 exemptions. Indian Railways, we have only 3 exemptions. Transportation of goods or services, we have exemption. Airport or port, we don't have exemption. Apart from that, all other services to business entities only we have this exemption, means this will come under other services to business entities. If Indian Railways provide services to government, even though both are government departments, we don't have any exemption with respect to that. Post provides services to government, again even though it is interdepartmental, that's not covered under exemption, so this is a separate point. So specific exemptions, first Right to Information Act charges, interdepartmental services, right to use telecom spectrum allocated before 1/4/2016, but what is exempted? Both one-time charges as well as annual royalty. Right to assign, like right to use natural resources, assignment of right to use natural resources. So that is before 1/4/2016. What is exempted? Only one-time charges. Right to use natural resources to an individual farmer. What is exempted? So that is both one-time charges as well as annual right is exempted, but it can be assigned any time. But it is assigned to an individual farmer. Then merchant overtime charges under customs, MOT charges. So customs will work after office hours for which they collect this. Then safety certificate charges paid to the state government for giving the safety certificate. Consideration for tolerating an act. Whenever it is consideration for tolerating an act, you need to keep in mind one point, that is, it should not be covered under the circular. So there is a circular, CBIC circular, which says that first, whenever we are collecting the any amount as damages, check whether it is arising out of contract or not arising out of contract. If it is arising out of contract, okay, it is arising out of contract. If it is not arising out of contract, no doubt it will not be treated as consideration because it is mere compensation, not arising out of contract. So it will not be treated as consideration. If it is arising out of contract, in that arising out of contract also you need to check one point, whether the nature is to penalize a person or to discourage the person, means there is a damages which is suffered because of which this is being levied, like check dishonor charges or early termination of the contract. Early termination of the contract also, in that case also it will be coming. Okay, so there is one question in the solved workbook, Ajatasatru Industries, like that one question is there. So actually in that question, so that circular is not considered. That's why I say study material question. They have not considered that circular. They should have considered that circular. If they consider the circular, early termination of the contract. Whenever there is an early termination of the contract, that will have a damage to the other person. So because of which, again, it will not be treated as consideration. So remember, whenever there is a damages arising out of contract, but the nature of damage is such that, so in order to penalize a person, to discourage the person, because if he is doing that particular act that is going to cause any damage to me, any big damage to me, that's why I will be levying that. Then also it is not treated as consideration and it will not be treated as supply. So the intention is very, very important. So what happens? He just breached the condition of the contract. When he breaches the condition of the contract, so that's okay. This is regularizing the transaction. But when he terminates the contract, definitely that is going to cause a huge loss to me. So due to that reason, to penalize the person or to discourage the person from doing it, I will be levying. Again, it will not be treated as consideration, it will not be taxable. In all other cases, the damages or any amount collected will be taxable. However, if it is by government, then it will be exempted. Okay, so that is this. So consideration for tolerating an act. Then share of profit petroleum. Share of profit petroleum. So profit petroleum is a concept that arises in case when government is assigning right to extract petroleum crude or natural gas. So whenever they are assigning right to extract petroleum crude or natural gas, they will be collecting two types of consideration. One is royalty, which is always taxable. Then the share of profit. So share of profit is arised by way of revenue from operations minus cost petroleum. Cost petroleum is recovery of expenses by the leaseholder. Recovery of expenses by the leaseholder from the government. So that recovery of expenses, cost petroleum will be taken out and that is also exempted. So the balance left is known as profit petroleum. In that profit petroleum, a percentage will go to the government and a percentage will go to the leaseholder. That percentage received by the government is exempted. That percentage received by the leaseholder is not a supply because investment activity is not a supply. When I invest in a business and I get some return from that business called as profit, that is not a supply. Then registration charges under any law for the time being in force. It can be company incorporation charges or property registration charges, vehicle registration charges, etc. Fee for birth certificate, death certificate, visa, driving license and passport. So birth or death certificate, driving license, visa or passport. Guarantee commission. So government will give the guarantee with respect to loans taken by public sector undertakings. When they are giving the guarantee to the loans, so the public sector undertakings will pay the guarantee commission, that is exempted. Then excess royalty collection contractor to the extent of variable royalty. Government will appoint one person as excess royalty collection contractor to receive the variable royalty and pay the fixed royalty. To the extent of variable royalty, they are not required to pay GST because anyhow the leaseholder will pay GST. For example, if the variable royalty is 60 lakhs and the fixed royalty is 50 lakhs, then already on 60 lakhs the leaseholder has paid GST, so ERCC is not required to pay any GST. If the variable royalty is 40 lakhs and the fixed royalty is 50 lakhs, then the leaseholder will pay GST only on 40 lakhs, so ERCC has to pay GST on the difference 10 lakhs, which means ERCC is exempted only to the extent of variable royalty. Then next we have fee for granting national permit to goods carriage to operate throughout the India or between the contiguous states. So between these states, if there is any permit charges which is paid by the transporters, that is also exempted. So these are the 14 specific exemptions. Apart from this, we have 2 general exemptions. Services provided by government to business entity other than above, where the business entity's turnover during the previous year does not exceed threshold amount. However, this first exemption is not applicable in case of renting of immobile property. Whereas second, if the value of supply does not exceed 5,000 rupees per invoice. In case of continuous supply of services, we need to take it as 5,000 rupees per annum. Continuous supply of service means a service which takes more than 3 months to complete and involves periodic payment obligations. So these are the exemptions with respect to this. And so RCM is not there in this test, so that will be in the next test. So due to that reason, we will be discussing it later. Right now your focus should be on whether it is taxable or whether it will be exempted. Okay. Then next, connecting to this, for transportation also we have, because in this chart everything is over, transportation is only left. For that we have a separate sector, transportation related exemptions. Then in this we need to understand various definitions. Government refers to central government department, state government department, local authority. Local authority means panchayat, gram panchayat, or municipality, corporation, cantonment board. Government authority, government entity has the same meaning. Both are established in an act of parliament or state legislature, or any board or body in which government has invested greater than or equals to 90%. But if it is for carrying out the functions under constitution, it is called as government authority. If it is to promote business or commerce, then it will be called as government entity. Government agency means any person who is providing services to government. So government is required to do some functions under the constitution, so that they will outsource it to some other person, that some other person will provide the services to the government, so that will be coming under government agency. Example, urbaser. So solid waste management is the work of the government, that is cleaning the garbage, etc. But they outsource it to one person called as urbaser, or clean up Mumbai, like that lot of agencies are there. They are called as government agencies. Same way, laying down road is the job of the government as per constitution, but they outsource it to contractors, so the contractors will be coming under government agency. Then services provided to government. So far what we have seen is services provided by government and service provided to government. So in this, first we have government authority. Just now we discussed government authority means, so any board or body established in an act of parliament or state legislature, or board or body in which government has invested greater than or equals to 90%. Any service provided by government authority to any person will be exempted. So even public works department, government authority includes RERA, real estate regulatory authority, lot of authorities are there, and CMDA. So Metro Development Authority, all urban development authorities and all will come under government authority. So services provided by government authority, any service provided by the government authority will be exempted to any person. Whereas services provided to government authority, that will be exempted with respect to few activities. So for that I asked you to remember one easy way. That is, there is a person who is living in a slum area. In that slum area, so there will be no proper water facility, and there will be lot of open drainages. Because of that open drainages, so what will happen, mosquitoes and all will come and that will bite them, and they will have lot of health issues. Okay. And now in this case, what are the activities connected here? Slum improvement, upgradation, water supply, and then open drainages, sanitation conservancy, and the garbage needs to be cleaned properly, solid waste management, and then public health. So these are the 5 activities: water supply, sanitation conservancy, solid waste management, public health, and slum improvement. So these activities in relation to government authority is only exempted, all other activities will be taxable. And whenever we say government, whether it includes public works department, yes, public works department is part of government only, because that is one of the department of government. All departments of government will come under government only. Then now any service is provided to government, now to government, previously to government authority, now it is to government, and here few activities are exempted. What is that? First point, any service, it can be any service. Pure services with respect to article 243 G or W of the constitution. So just now we discussed government agency. Government agency means a person who provides services to the government. So here it is a case of government agency. Government is required to do certain activities as per constitution, so they outsource it to any person. That person, if they provide pure services, means that should not involve goods, then it will be exempted, but it should be connected to article 243 G or W of the constitution. Number 2, if they provide a composite supply that involves both goods and services, if the value of goods does not exceed 25% of the total, then also it will be exempted. Then fair price shops, that is ration shops, Then training program in which government is bearing 75% or more of the total expenditure, then also it is exempted. Then import of services for non-commercial purpose other than OIDR services, because government will come under non-taxable recipient. So any import of service other than OIDR by non-taxable recipient is exempted, that is also there. These are the activities which are exempted. First and second related to Article 243 GW of the Constitution. In that, first is pure agent, second one will be goods where value does not exceed 25% of the total. Then training program, fair price shops. Fair price shops means ration shop, they get a commission, that is exempted. Then import of service other than OIDR, okay, but for what purpose? Non-commercial purposes. Then apart from this, any other activity of service provided to government will be taxable. Now what if these activities, water supply, sanitation, conservancy, solid waste management provided to government instead of government authority, that is anyhow covered under the pure services. So all above service like water supply, solid waste management, etc. provided to government falls under pure service and it is exempted. Then third point, this third point was I was referring to, that is SPVs, special purpose vehicles will be providing to Indian Railways by way of developing the infrastructure, and that development of infrastructure will be allowed by the Indian Railways to use it by the SPVs. So SPVs will construct the lifts and escalators, allows Indian Railways to use it. During the construction period they get some charges, that is exempted. It's a May 25 amendment. Service provided by special purpose vehicle to Ministry of Railways by allowing them to use the infrastructure built and owned by SPVs during the concession period against consideration, that is exempted. Then services by governmental authority, so governmental entity, so government entity providing any services to government or a person specified by government is exempted, provided they are getting a grant, okay. So this is service provided by government entity to government or a person notified by government, and only if the grant is received, that is exempted. Then services by governmental authority, so already we know any service provided by government authority to any person will be covered under the exemption. So whether RERA is treated as a government authority, yes, RERA is a government authority and statutory collections made by RERA is covered under exemption, that is the latest circular. Government entity is also same as government authority except that it is not established to carry out the functions under constitution. So whether this exemption is applicable for government entity, no. For government entity we have only one exemption, but for government authority all services provided to any person will be covered under the exemption. Then next, accommodation services provided by Airforce mess or similar mess to its personnel. First of all, is it taxable or is it exempted? It is exempted because it is not covered under Department of Post and it is not covered under Indian Railways, it is not covered under transportation, it is not airport or port, and it is not services to business entities, it is to individuals, which is not covered under these 5 points. So therefore due to that reason it is exempted. Then supply of wheat flour, so when wheat flour is supplied after fortification, then in that case definitely the value of goods element exceeds 25% of the total, so it is not covered under this exemption of composite supply. Composite supply with respect to Article 243G or W of the Constitution, because the value of goods exceeds 25% of the total, so they will not get the exemption. Then sanitation services provided to Indian Army, so that is also not exempted. Generally pure services provided to government is exempted, even though Indian Army is government, but sanitation services provided to government is not covered under exemption here, because first of all it should be activity under Article 243G or W of the Constitution. As per Article 243G or W of the Constitution, Indian Army is not required to do these activities. Due to that reason, so any pure service provided to them will not be covered under that particular exemption. So sanitation services provided to Indian Army is not with respect to Article 243 and therefore it is not covered under exemption. Then next area that we are discussing is renting. Renting including leasing, licensing, etc. So following are exempted. First, in relation to movable property, what are all exempted? So total 4 points we have exemption in relation to movable property, that is motor vehicle. I have a motor vehicle that can carry more than 12 passengers, I am giving on rent to a road transport corporation. Number 2, I have an electric vehicle that can carry more than 12 passengers, I am giving it on rent to a local authority. Then I have a motor vehicle that can carry goods, I am giving on rent to a goods transport agency. I have a motor vehicle that is given on rent to a person who is providing transportation service to educational institution up to 12th standard or equivalent, that is category 1 education institution. These are the 4 exemptions that we have. in case of movable property, but all other movable property renting will be taxable. Immobile property divided into land and building. In case of building, we have 3 exemptions. What are the 3 exemptions? Number 1, suppose if I have a residential property that is given on rent for residential purpose to an unregistered person, then it will be exempted. And if I have a residential property that is given on rent to a registered individual for their family stay, even then it will be covered under the exemption. Then I have a building that I am giving for accommodation, minimum stay of 90 days, minimum stay of 90 days, where the value of supply does not exceed 20,000 per month per person, then also it is exempted. And this accommodation can be by residential property or commercial property, that is irrelevant. These are the 3 exemptions for renting of building. Then when it comes to renting of land, we have 2 exemptions, that too in the form of lease only. Here whenever we are referring to renting, that includes leasing also. What are the 2 lease of land that is exempted? So number 1, I have a land, it can be industrial land or agricultural land. Who am I? Government. Who am I? Government. So what I am doing, I am giving it to government authority or government entity. I am government, I am giving lease of land to government authority or government entity. What type of land? Any land. What lease? Any lease. Long term lease or short term lease. What is exempted? Both upfront charges as well as annual royalty will be exempted. Upfront charges and annual royalty with respect to lease of land by government to government authority or government entity. Second one, I am SIDCO, State Government Industrial Development Corporation, or any entity or body in which government has invested 20% or more. So what I am doing, I am giving the plots on rent, plots on lease. What type of lease? Long term lease. Only upfront charges is exempted. Upfront charges including preferential location charges with respect to long term lease, 30 years or more, of industrial plots or plots for development of infrastructure for finance business by State Government Industrial Development Corporation. What about this preferential location charges? In order to get the land allocated at a preferential area, we pay this preferential location charges. That is also part and parcel of upfront amount and it is exempted. But that preferential location charges usually will not be there in the context of government to government authority or entity. Only for others only it will be there. The difference between these two is that in the first case it is any type of lease, whereas in the second case it should be long term lease greater than or equals to 30 years. In this case it can be any land, but here it should be only industrial land or land for development of infrastructure for finance business. And here the supplier will be government and here the supplier will be State Government Industrial Development Corporation. Here the recipient is government authority or government entity and here the recipient will be any industrial unit or infrastructure developer who is infrastructure developer of finance business. Got it? That is the difference between these two. And yes, so in this case both upfront amount and annual lease rentals is exempted, but here only upfront amount is exempted. Then we have the next area, renting of precincts. So there is a religious place. That religious place is meant for general public and that is registered as a trust under Income Tax Act. That trust can be a charitable trust or a religious trust. And the precincts of the religious place is given on rent. For what purpose? If it is given for accommodation, so less than 1000 rupees, that is 999 rupees per day, then it will be exempted. If it is greater than or equals to 1000 rupees per day, then it is entirely taxable. Same way hall, so that is less than 10,000 rupees per day, 9,999 per day, it is exempted. For shop also less than 10,000, that is 9,999 per month, it is exempted. Here per day and here it is per month, it is exempted. If it is greater than or equals to that limit, then entirely it will be taxable. And wherever it is taxable, it will be FCM only. Then sports services, and we don't have to bother about FCM, RCM right now. So your focus should be on the exemptions. And again, when we learn for RCM, we will learn, because I just divided it into 2 parts. First focus on exemptions and thereafter you can focus on what is the charge related to this, because this is our first revision. In the first revision our focus should not be too much onto everything at a time. So let's divide it piece by piece and we will do. Then sports services. In case of sports services, we have total 3 exemptions. First exemption, sponsorship money collected by recognized sports body is exempted. What is the recognized sports body? So total 6 sports bodies we have: National Sports Federation and Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board and Panchayat Sports Board. So these are the 6 recognized sports bodies, and if they collect any sponsorship money, that will be exempted. For example, BCCI is a recognized sports body. If they are collecting sponsorship money from any person, Tata Body Corporate or firm or sole proprietor, any amount collected by them will be exempted. Whereas if it is collected by other than recognized sports body, then it will be taxable. So recognized sports body entirely, any person, it will be exempted, but other than recognized sports body, taxable. But who will pay GST? If the recipient is body corporate or firm, it will be covered under RCM. If the recipient is sole proprietor, then it will be covered under FCM, but it will be taxable. That's what we need to remember now. Next, second exemption, services provided by individual as a player, referee, umpire, coach or team manager to recognized sports body is exempted. What if they provide to unrecognized sports body? It is taxable. What if other than these 5 provide service to recognized or unrecognized sports body entirely? It will be taxable. What you need to remember is exemption, so the remaining cases it will be taxable. So services provided by player, like individual as a player, referee, umpire, coach or team manager is only exempted. Then third point, services provided by one recognized sports body to another recognized sports body is also exempted. Then next we have services by unincorporated association to its members. There is an unincorporated association which is providing services to its members. Suppose if that unincorporated association is a trade union, industrial labor union or agricultural labor union, entirely it is exempted, whatever may be the amount. Suppose if they are providing service which is an exempted service, even if it is provided by association to its members also, it will be exempted. Example, electricity exempted. If the association is giving electricity generated by them to the members, then also it will be exempted. And one more point, healthcare service is exempted. If the association is providing the vaccination to its members, that is also exempted because the underlying service itself is exempted. Then membership fees or maintenance charges. Suppose if it is a resident welfare association, does not exceed, resident welfare association means apartment owners association, only resident welfare association for residential property, not for the commercial property. For commercial property also there will be maintenance charges that will be taxable, only for the residential property. If it does not exceed 7,000 rupees, 7,500 rupees per month per member, then it will be exempted. If it exceeds 7,500 rupees per month per member, entirely it will be taxable. If there is any other association, again, if it does not exceed 10,000 rupees per annum, it's not per month, it is per annum. Here it is per month, here it is per annum, per member, then it is exempted. Exceed 1,000 rupees, entirely it will be taxable. And there is a circular in this regard. So electricity supplied by malls or airport operators, real estate owner, real estate developers or resident welfare association. So if there is any electricity supplied by the association to its members, what is the treatment of that electricity? First, if the electricity bill is in the name of the member, but which is paid by the association, and in turn recovered it from the member, then pure agent will come. So this will not be forming part of maintenance charges. This should not be added to maintenance charges. Then next, second point, suppose the bill is in the name of the association and the association is recovering it from the members on actual basis. Whatever is the exact amount, that much is only recovered. Again, it is deemed to be pure agent and it will not be included in the maintenance charges. Suppose if it is collected by the association from the members on an ad hoc basis, not on an actual basis, then this should be forming part of value entirely. So 3 points to remember. First, bill is in the name of the member, paid by the association, recovered from the member, pure agent, don't include in maintenance charges. Number 2, bill is in the name of association, paid by association, recover from the members on actual basis, don't include it in the value of maintenance charges. Other cases means on an ad hoc basis it is collected, included in the maintenance charges. If the maintenance charges exceed 7,500 per month per member, entirely taxable, or 1,000 rupees per annum per member, entirely taxable, otherwise it will be exempted. If the resident welfare association collects an amount exceeding 7,500 rupees per month per member, then the entire amount is taxable, even though there are contrary judgments related to this, entirely it will be taxable. Then transportation charge, transportation of passengers. Transportation of passengers following are exempted. First we have railways, airways, waterways and roadways. In case of railways we have 2 exemptions, that is other than first class or AC is exempted. Passenger transportation other than first class or AC, and first class or AC will be taxable. Other than first class or AC, sleeper coach etc. will be exempted. Then metro, mono or tramway is also exempted. This is already covered under Indian Railways, that is notified services to individuals etc. It's already covered there. Then airways. Airways, if the starting or ending point of the passenger is in northeastern states or Bagdogra and West Bengal, but it should be in economy class. Then number 2, consideration received as viability gap funding. So this will be up to 3 years from the date of commencement of operations. This money received from the government towards viability gap funding. And next, what are northeastern states? MMTN, ASAM. So Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh and Meghalaya. Then waterways. In case of waterways, inland waters is always exempted. Coastal waters also exempted, but it should be within India, between places in India, for other than tourism purposes, and it should be for public transportation. And who should be operating it? It can be operated either by the government or by the private sector, that is irrelevant, but it should be for public transportation other than tourism purpose predominantly. Then roadways. In case of roadways, non-AC stage carriage, non-AC contract carriage other than tourism or hire, and metered cab or auto rickshaw is exempted. But if these three are through e-commerce operator, then it will be taxable. Then transportation of passengers other than above is always taxable. That is ropeway, cable car, horse cart, rickshaw, chartered flights, helicopter, etc. Then renting of motor vehicle is different from transportation of passenger. We need to understand the difference. In case of renting of motor vehicle, the vehicle is at the disposal of the recipient for a period of time, which is absent in the case of transportation of passengers. So based on that, we need to decide whether it is renting of motor vehicles or transportation. Then when it comes to transportation of goods, following are exempted. In case of railways, only specified goods are exempted. That specified goods is there even in case of waterways, and even in case of GT also that specified goods are there. Three places specified goods transportation is exempted, that is railways, waterways between coastal waters and GTA. What are those specified goods? Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, defense or military equipment, and relief material for natural or man-made disasters. Okay, agricultural produce, food grains, organic manure, newspapers and magazines, defense or military equipment, relief material for natural or man-made disasters. Three places. What are the three places? Railways, then waterways, coastal waters, and GTA. In these cases it will be exempted. In other cases it will be taxable. Okay. Then next, airways outside India to India is only exempted. So transportation of goods by airways from outside India to India is exempted, but India to outside India is not covered under exemption. Waterways, inland waterways, everything is exempted. Coastal waters also, those specified goods between place in India is exempted. Roadways, other than GTR courier, everything is exempted. Only GTR courier agency is taxable. And transportation of goods by waterways from outside India to India is taxable. Also transportation of goods by airways or waterways from India to outside India is also taxable. Now we don't have any exemption with respect to this. Then GTA services. First, specified goods. Number two, if the recipient is central government, state government, union territory or local authority which is registered only for deducting TDS. Number three, if the recipient is individual, HUF, AJP or a trust, all are unregistered and not having factory, then also it is exempted. Then who is a GTA? GTA is a person engaged in transportation of goods by road and issues a consignment note by whatever name called. And GTA has two options, either to pay GST under FCM or to pay GST under, that is to authorize the recipient to pay under RCM. So two options are there, they can choose FCM or RCM option. If it is FCM, GTA will pay. If it is RCM, recipient will pay. Again under FCM they have two rates, 12% with ITC, 5% without ITC. The 12% with ITC, 5% without ITC, with respect to each invoice they can choose. And whatever invoices with 5% without ITC will be treated as exempted turnover of GTA, because they cannot enjoy the ITC to that extent. And 12% with ITC will be treated as taxable turnover and they can take ITC with respect to this. This is under FCM option. Whereas in case of RCM option, the liability to pay GST is on the recipient. Okay, and wherein the rate will be always 5%. But this FCM versus RCM, they need to decide in the beginning of the financial year, and whatever they have decided in the beginning of the financial year, that will be applicable throughout the financial year, and they need to decide it between 1st January to 31st March of the preceding financial year, that is last quarter. So however, such option should be selected between 1st Jan and 31st March of the previous year, and option 1 selected remains till the subsequent selection is made. Under FCM they have two rates, GST at 12%, 12% means with ITC, okay, whereas 5% is without ITC. Or RCM, GST will be at the rate of 5%, and that 5% can be taken as ITC. Of course, this 12% or 5% recipient can definitely take ITC. This restriction is only to the goods transport agency. If they are not issuing consignment note, then they are not called as GTA, and consequently transportation of goods by roadways will be exempted, because other than GTR courier will be exempted. Consignment note issued by transporter contain details of consignor, consignee, goods transported, vehicle details, all the other details like where it started, where it ended, everything will be there. Then we have a CBIC circular related to transportation of passengers. There is a person who is giving his non-AC vehicle to another person for transportation. Now, is it operated on a predetermined route on a predetermined schedule? Yes. Then it will be coming under transportation only. Contract carriage other than tourism or hire, as it is non-AC, it will be exempted. Suppose if the vehicle is at the disposal of the recipient, if the vehicle is at the disposal of the recipient for how many days? Is it for a period of time or is it for a particular voyage or journey? If it is for a particular voyage or journey, still it is transportation only, and then it will come under contract carriage on hire. Contract carriage on hire, it will be taxable. Whereas if it is vehicle at the disposal of the recipient for a period of time, then it will come under renting of motor vehicle, and we don't have any exemption, so therefore it will be taxable. For only 4 exemptions are there for renting of motor vehicle, that is not applicable in this case, so it will be taxable. And again, contract carriage, that is transportation of passengers, is not covered under RCM, but renting of motor vehicle is covered under RCM if 3 conditions are satisfied: supplier other than body corporate, recipient body corporate, rate of GST 5%, all other case it will be FCM. So what is stage carriage? Stage carriage means a vehicle which transport passengers where they can board at any stage during the journey, whereas contract carriage is only for point to point travel. Then transportation of minerals within the mining area by vehicles deployed by driver for a specific duration falls under renting of motor vehicles. That is, so you are asking me, that is like, see the duration, for a specific duration you are asking me to give the vehicle wherein for a specific duration I need to transport the minerals from one location to another location. As there is duration that is covered, definitely it will be coming under renting of motor vehicles. So will come under renting of motor vehicles but not transportation of goods. Then we have import of services. Import of services broadly divided into 2: OIDR services other than OIDR services. OIDR services, online information database access and retrieval services, which is requiring internet. In the absence of internet it cannot be provided. OIDR service will always be taxable. If it is imported by non-taxable online recipient, it will be taxable under FCM, the supplier will pay GST. If it is imported by other than non-taxable online recipient, it will be taxable under RCM. But other than OIDR services by non-taxable recipient will be exempted, other than non-taxable recipient will be taxable. But in this regard, we have one exemption. What is that? There is an Indian establishment of a foreign airline company and they are importing services without consideration, and it is 71C. Import from where? From their establishment located outside India, but Ministry of Civil Aviation certifies that there is a reciprocal agreement between India and the foreign country, which means like how foreign company airline is having a Indian establishment, like that Indian airline will have a foreign establishment, so that country should have given the reciprocal exemption. Then only here to the Indian establishment of the foreign airline company, they will enjoy the exemption with respect to the import of service, but importantly without consideration. Then in all other case it will be taxable under RCM. Here we need to understand the meaning. OIDR service means any service which is mediated by information technology over internet, and it is impossible to ensure in the absence of information technology, like advertising on internet, providing cloud services, QuickBooks, SAP, then provision of e-books, Kindle, Spotify, providing data or information retrievable, Udemy, Canva, online supplies of digital content like Netflix, Amazon Prime, digital data storage, cloud storage, then online gaming. But online money gaming will not come under OIDR services, that will be coming under goods. Specified actionable claims are treated as goods. Okay. And non-taxable recipient, 3 people: individual, trust, government. Individual should be unregistered, trust either registered or unregistered under GST, government either registered or unregistered under GST. Individual for what purpose? Personal purpose. And trust for what purpose? Charitable activities. Government for what purpose? Other than business or commerce. Then non-taxable online recipient, any unregistered person receiving OIDR services. So any unregistered person, so it can be individual, HUF, AOP, BOI, partnership from any person, any unregistered person, or if they are registered only for deducting TDS, they will come under non-taxable online recipient. And wherever GST is payable under RCM, in these 2 places they are compulsorily required to get registered. Whereas even the supplier of OIDR services located outside India who is liable to pay GST is also compulsorily required to get registered. Whatever GST paid under RCM can be taken as ITC. And there are some circulars in this regard. There is a Indian affiliate of a foreign company which is taking loan. when they are taking the loan from the foreign affiliate and they pay only interest, they don't pay anything else, then this particular interest will not be treated as supply and it's not exempted, because the Indian entity, if giving loan against interest, that is exempted. So the exemptions are applicable for people in India, but the exemption is not applicable for import of services in relation to a loan against interest. So generally there is a company in India which is giving loan to another person and interest is collected. We know that interest on loans, advances, deposits will be exempted. But what if the company is outside India and giving the loan? That is not exempted because it's not covered under import of services. Whenever it is import of service, we need to check under import of services. It is not covered under import of services. So therefore exemption will not be available. Due to that reason, they have created a circular which says that if there is a foreign company outside India and its Indian affiliate is in India, both are related, and if they take a loan, loan is taken, and what is the consideration they paid? Only interest or discount. So whether loan taken by Indian affiliate from overseas affiliate, where both being related constitute supply. If the consideration for loan is only interest or discount, it is not a supply, and value under rule 28 will not be applicable. Even though it is a related party transaction, first it should become supply na. Then what if the consideration for loan is processing fee, administrative charges in addition to interest or discount? Then supply under 7(1)(b), because they are paying consideration. Supply under 7(1)(b), and supply of service is where such processing fee or administrative charges is treated as consideration, and as it is an import of service from a related person, rule 28 will be applicable, and GST payable under RCM being import of services. Similar way, if there is a subsidiary company in India which is taking ESOP, ESPP or restricted stock units from its foreign holding company. There is a foreign holding company which is giving ESOPs etc. to the subsidiary company for giving it to the employees of the subsidiary company. These ESOPs etc. will have a cost. So not the exercisable price, not the market price, not the actual market price, but the price at which this option can be exercised, not the market price. For example, so this can be exercised at 200 rupees, means 200 rupees is the cost. Okay, that much amount the Indian entity has to make payment to the foreign holding company. So if they pay only the cost, they are not paying any extra charges. Again, it is not a supply and there is no GST liability. Whether GST is applicable on ESOP, ESPP, RSU provided by a company to its employees through its overseas holding company. In case of cost to cost reimbursement by domestic subsidiary to its foreign holding company, it is not treated as supply and there is no GST liability, because it will come under transaction in securities without any consideration. And in case of additional charges collected by foreign holding company, then that additional amount is treated as supply of service and GST payable under RCM by the domestic subsidiary company. Okay, this is with respect to the ESOP point. Then construction services. In relation to construction services, there is a first exemption, construction of an individual house. Individual house, irrespective of the floor area or cost, not as a part of complex, is exempted. What is an individual house? A house occupied only one family. But remember, only construction service is exempted, not repair services. And it should be pure labor contract and not works contract. Number 2, there is a project, Housing for All Mission or Pradhan Mantri Awas Yojana. Either construction, repair, alteration, renovation, etc. of these projects. So first point only construction, second point construction as well as repairs. Then next one, if I am selling a flat along with the UDS, then 1/3 of the gross value of the flat is exempted towards land or undivided share of land, where the gross value includes value of the land. Only 1/3 of the gross value is only exempted. Then TDR, FSI and long term lease. So transferable development rights, floor space index or long term lease, that is lease for greater than or equals to 30 years, upfront amount paid will be exempted to the extent of residential units booked before completion certificate or first occupation, whichever is earlier, or divided by total floor area of the project. So say this, exemption with respect to inward supply of FSI, TDR and long term lease. In such case, liability to pay GST is on promoter or builder under RCM. So value of inward supply into 18% into floor area of residential flats booked before completion certificate or first occupation, whichever is earlier, divided by total floor area of all the flats in the project. And for example, value of inward supply of TDR is 10 lakhs excluding GST at 18%, GST payable on inward supply 1,80,000, floor area of residential units booked before completion certificate 28,000 square feet, and total floor area of the project including residential commercial is 50,000 square feet. So what we need to do? 1,80,000 into 28 divided by 50. So 1,08,000 will be exempted. So remaining 1,80,000 minus 1,08,000, 79,200 will be GST payable under RCM, because services, FSI, TDR and all will come under RCM, where liability to pay GST is on promoter or builder. And what is the taxability of preferential location charges? Preferential location charges is payable by the person when he purchases the flat. When he purchases the flat, so for example east facing flat or somewhere seaside facing flat, like that, there will be some preferential location charges. If it is paid along with the consideration for construction service, definitely we will apply it as composite supply. So treated as construction service by applying composite supply, and taxable based on construction services. Suppose if entire consideration is received before obtaining completion certificate, or like entire consideration after obtaining completion certificate or first occupation, whichever is earlier, it is not a supply, otherwise GST payable. What if we pay this preferential location charges separately, independent of the construction service? Then in that case it is taxable separately as supply of service, where the GST rate will be 18%. So this is a May 25 amendment for preferential location charges. Then advocate or arbitrator services. Related to advocate or arbitrator services, we have three. That is, if there is a normal advocate or firm of advocate, senior advocate or arbitrator. If they are providing services to a person other than business entity, all these three cases it will be exempted. So it is a simplified version. Okay. So there is a normal advocate or firm of advocate, senior advocate, arbitrator. What is common? If they provide services to a person other than business entity, that is to an individual, it will be exempted, no difference. If they provide service to government, government authority or government entity, then also it is exempted, no doubt. If they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, then also it will be exempted. If they provide service to another advocate or firm of advocate, only in case of normal advocate or firm of advocate it is exempted, whereas in case of senior advocate, who should be taken as a recipient? The ultimate litigant, applicant or petitioner should be taken as a recipient, and accordingly either it will be taxable or exempted. If that ultimate litigant, applicant or petitioner is a person other than business entity, or is government, or is business entity whose turnover during previous year does not exceed threshold limit, then it is exempted, otherwise it will be taxable. Then next, arbitrator, impossible. Arbitrator will not provide service to another advocate or firm of advocate. Now always advocate or arbitrator services falls under RCM if taxable. Service provided by senior advocate to individual advocate or firm of advocate is not exempted. In such case, the ultimate litigant or applicant shall be deemed to be recipient. An advocate, that is individual or firm, and arbitrator are not required to get registered. Why they are not required to get registered? Because their outward supply will be either exempted or it will be covered under RCM, so they are exempted from registration. Then we have exemptions under IGST Act. In that we have 4 points. Point number 1, if there is a supplier of service and recipient of service, both are outside India, all services will be exempted, because both supplier of service and recipient of service are outside India. Number 2, services provided by an Indian tour operator. To whom? To a foreign tourist. Where the tour is conducted fully outside India, then it will be exempted. What if the tour is partly in India, partly outside India? To the extent of tour conducted outside India, it is exempted. That is, A, total consideration into number of days the tour is conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower. In this, suppose if the time spent in a day exceeds greater than or equals to 12 hours, consider it as full day, and if the time spent is spent in a day less than 12 hours, consider it as half a day. Then next, 4th point, services provided by intermediary. There is an intermediary in India who is connecting the seller outside India and buyer outside India. They get a commission. That commission will be exempted, even though as per place of supply, location of supplier is the place of supply. So services provided by intermediary when location of both supplier and recipient outside India, agent in India connecting supplier and recipient goods outside India for a commission is exempted. That is this. Then we have miscellaneous exempted services. Point number 1, I am transferring my business as a going concern, lump sum like sale or transfer, slump sale, all these things, but as a going concern, which means both assets and liability should be transferred, then it is exempted. Then services associated with transit cargo to Nepal and Bhutan, but only to Nepal and Bhutan. When it is from Nepal and Bhutan, it should be empty cargo container, then only that freight will be exempted. Service by way of collecting or providing news by independent journalists, Press Trust of India or United News of India. So they collect the money for giving the news, exempted. They collect the money for broadcasting the news, that is exempted. Then services of public libraries by way of lending books or other knowledge enhancing material, so the lending fees will be exempted. And there is an organizer where in India who is providing exhibition outside India to the recipient in India. Supplier and recipient both are in India. Supplier is organizer. He is organizing a business exhibition where the business exhibition is held outside India. The money received will be exempted. Then services by way of public conveniences such as facilities of bathroom, lavatory, etc., urinal, so that is exempted. Then service by way of access to road or bridge on payment of toll charges. Toll charges is also exempted, but toll charges other than payment by way of annuity. So only normal toll charges is exempted. Annuity means yearly some amount is payable by the government, that is not covered under toll charges. And overloading charges at toll plazas. So, and higher toll charges for not having functional FASTag. This is also part and parcel of toll charges, and that is exempted. Then services by a performance artist in folk or classical art form of music. So either it should be in folk or classical art form of music, dance and theatre, but the consideration per performance should not exceed 1,50,000. Also if they are acting as brand ambassador, this exemption will not be applicable. Then service by way of training or coaching in recreational activities relating to arts or culture. So they are providing training in arts, that can be martial arts, dance, music classes and painting classes, etc., arts or culture. But this arts or culture should be by an individual. Suppose if there is a Bharatanatyam dance school by a partnership firm, taxable. If it is by an individual, then only it will be exempted. So arts or culture by an individual. Suppose if it is sports, by a charitable trust. Then satellite launch services supplied by any person. Then next we have transmission or distribution of electricity by an electricity transmission or distribution utility. So generally electricity is exempted. And now we have some point related to this. Not only electricity, even the incidental or ancillary functions of electricity is also exempted, like providing metering equipment on rent, testing of meters, releasing of electricity connections, shifting of meters, which are incidental or ancillary to supply of electricity, and that is also covered under exemption. Then research and development services. So whenever we do R&D services, by whom? By any person, but the consideration in the form of, so research and development done by any person, but they should be getting consideration in the form of grants. From whom? The recipient should be whom? The recipient should be government entity or a research association, university or college under section 35 of Income Tax Act. In scientific research expenditure, there are some universities or association, that. So I am doing research, any person can do the research. If they are doing research and they are getting money from either government authority or that section 35 scientific research or association, that will be exempted, but it should be in the form of grants. So these are the various exemptions that we have with respect to GST. Fully we have completed. Okay.